What's up, everybody? Drew, aka Catching Rockets, here. So I get several questions on trading futures, what futures are, why trade futures versus options. I'm going to try to answer all of those questions, and there's going to be a lot of text, so I'm not going to be reading through all of it. If you want to read it, you can pause the video, read the text, and then restart the video. But a future contract is a legal agreement to buy or sell a particular commodity, asset, or security at a predetermined price at a specified time in the future. Futures are contracts standardized for quality and quantity to facilitate trading on a futures exchange. The reason that they probably are mentioning standardize is because futures are standardized across all brokers, meaning if I were to go on two brokers at the exact same time and look at the same future, they would both have the same price. Whereas if I look at Forex on two different brokers at the same time, the price could be completely different because it's not standardized across all brokers. The buyer of a future contract is taking on the obligation to buy and receive the underlying asset when the futures contract expires. This is not 100% true, but kind of true. The seller of a future contract is taking on the obligation to provide and deliver the underlying asset at the expiration date. So what they're talking about there is with futures, like we talked about in the previous paragraph, you're going to be buying or you're basically bidding on a commodity asset security. And if you didn't close your contract before the expiration and it was in the money, you would basically be assigned those, whatever it was you're trading, whether it be oil, eggs, wheat, gold, silver, whatever. There's basically a future for everything. So the reason that I say that that's not 100% true is in order to be assigned, you would have to fill out a bunch of paperwork and jump through a bunch of loopholes to actually be able to be assigned a commodity. They'll generally just liquidate you at the current cash value. I'm not going to be rereading all of this, but a future contract, this is the second key point here. Future contract allows an investor to speculate on the direction of a security, commodity, or financial instrument, either long or short, using leverage. So basically, the reason that I focused in on that is terminology might be slightly different between, trading stocks or trading options, but ultimately it's the same thing. So in options, we say we're buying calls, and that would be the same as going long in futures. It's saying that price is going to move up. In options, we buy puts, and that would be the equivalent of going short on futures. Same thing, saying price is going down. The rest of these bullet points we pretty much covered in the last slide. Little picture down in the bottom right, legal agreement to buy or sell a particular commodity, asset, or security at a predetermined price at a specified time in the future. The reason I'm mentioning that again is this is a little bit funny here. I guess it'll be funny on the next slide, not this slide. So this slide, this is a very important part of trading futures. Basically knowing the symbol code for what you're trading. So each month, as you can see in the top left, each month has a letter assigned to it. So January F, February G, March H. I'm not going to go through the rest. You can see them yourself. For the things that I trade, they all have quarterly codes. So right now, I'm trading the March expiration, which is H. From there, I'll switch to June, which is M, and then September, which is U, and December, which is Z. So basically, every 3 months, H, M, U, Z. And then basically you take, so if you look at the picture on the bottom right here, your contract symbol, which in this case is gold, GC. Our expiration month in this particular example is December, which is going to be Z, and the expiration year is 2017. So if I was trading this contract, the code would be GCZ17. Me personally, I trade NQ and I trade ES. So to break down what that code would look like today, I'm trading the H contracts. So for ES, it would be ESH and then 4, because I trade on Quantower. And instead of using 2 digits, they just use the last digit of the year. Being that it's now 2024, that digit is going to be the number 4. So again, the contracts I'm trading right now is going to be ESH for March contract, and then the number 4 for the year 24. If I was trading NQ, same thing. It's going to be NQ March, or H for the month of March, and the number 4 for the 24. Also important to mention, you can trade micros, which is, so I trade minis, which is going to be the full contract, like the NQ, NQH4 or ESH4. If you want to trade a micro, those are going to be 1/10 of the mini. So basically every 10 micros would equal 1 mini. So as an example, NQ moves in 25 cents increments. Each 25 cent is considered 1 tick. And each tick on NQ is going to be a $5 move. So 1 point would be $20 because it's 4 times 5. 25 divides by, or $1 divides into 24 4 times, or whatever. I don't know what I'm saying. Math. Yeah. And so every point on NQ is going to be $20. If I was trading the micros, the code would be M for micro, NQ, which would be my contract symbol, and then H for March, and the number 4 for 2024. And those, so since they're 1/10 of NQ being $5 per tick, it would now be 50 cents per tick. And each point would be a $2 gain or loss, depending on if I'm correct on the direction or not. With all of that said, if you know how to trade options, you can use your same strategy to trade futures, and it will work exactly the same. There's just going to be some benefits to trading futures that you don't get with options. So let's move on. Hopefully everybody understands the futures symbols. If you don't, you can always reach out, DM me on Discord or whatever, and I'll go over it with you one-on-one. It's not too complicated, but it's a little bit funky when you first start out. So this is the funny slide. This did not end up happening, but this particular person bought oil futures, ended up making almost $30,000, $29,790. But he was in a bit of a bind. He wasn't able to close his position, and so he was concerned that he was going to get assigned the oil that he had bought. But again, you would have to fill out a whole bunch of paperwork or whatever to make that happen. And then also, if you look where it says edit update, thankfully the CME NYMEX, the reason I pointed out that part is where it says CME. If you're using like TradingView for charting, you need to make sure that you buy the CME group for your whatchamacallit. I just completely spaced out. For your live data, you need to buy the CME group. Sorry, that's the word I was looking for. Moving on. This, again, I'm not going to read through this whole thing. You can pause it if you want to, but it's just basically talking about um, how somebody might say they bought oil futures, which would be the same thing as an oil futures contract. Um, or when somebody says a futures contract, they're talking to a specific type of future, such as oil, gold, bonds, or S&P 500 index futures. Actually, it's good that that came up. So I talked about NQ and ES. NQ is going to be your Nasdaq futures, and ES is basically your S&P 500 futures. So basically, the future for SPY. Why trade futures? And this is kind of specifically targeted towards futures versus trading options. Um, Futures have way more liquidity. Um, if I'm trading ES versus SPY, I'll get a much bigger move in the same amount of time. Like ES and SPY will move together, but the move that I get monetarily on ES will be much bigger than what I make on SPY in the same amount of time. So more liquidity, faster moving. You're able to trade 23 hours a day, 6 days a week. I'm not going to use times of the day because everybody lives in different time zones. But if you know when the New York Stock Exchange closes, futures close 1 hour after the New York Stock Exchange closes. They reopen an hour after that. And then as far as the 6 days a week part, they close Friday evening at the same time, an hour after the New York Stock Exchange closes. And then they would reopen at the same time that they open every day of the week, but on Sunday afternoon. Whatever, time zone that is for you, whatever time that is for you in your time zone. This next bullet point, I'm not going to talk on too much because I'm not a CPA. I'm not a tax professional. If you have questions about this, reach out to your CPA or whoever does your taxes for you. But futures are traded at the 60%, 40% tax rule. And this is for U.S. citizens. I don't know about other parts of the world. And what that means in a nutshell, again, I'm not a CPA, but 60% of your gains would be taxed at your normal tax rate, and the other 40% would be taxed at the capital gains tax rate. Whereas options, if you close your position in under a year, your entire position is getting taxed at your capital gains tax rate. So there's tax advantages to trading futures. This is a big one. There's no PDT rule. So no pattern day trading rule. You can do unlimited trades on the same future. There's also no wash sales. If you don't know what that is, just Google it. But basically, if you keep trading the same equity over and over again with options, you'll get what's called a wash sale, and you could end up owing a ton of money on your taxes. Again, I'm not a tax professional, so I don't want to talk about it too much, but you can Google that one for yourself, wash sales. But so no pattern day trading rules, unlimited day trades. You don't need $25,000 to have those unlimited day trades and to not have the pattern day trading rules. You can actually fund a futures account with very minimal amount of money. The key thing is you have to make sure that you're not dipping below your margin requirements. So I'll give an example on this. Like you could open a futures account with $100, and you could trade the micro ES, so MES. The micro ES requires $50 of margin, which basically means as long as your account stayed over $51, you would be good to go. If your account dipped below $50, like $49, they would actually margin call and liquidate your account. So just be aware of what you're trading and how much margin is required, and don't let your account go below that amount. Otherwise, your account's going to end up getting liquidated for whatever you are trading. And then lastly, this is a big one. There's no theta decay. There's no Greeks with futures. There's no theta decay. Why this is a big one for me is when I did trade options a lot, or I should say when I was like solely an options trader, There was a lot of times where I would get frustrated, where I would enter a position, let's just say long, and so I enter long, price chops sideways, move finally happens. It goes exactly where I thought it was going to go, and I just made break even because theta ate up my trade. Or worst case, it goes where I thought it was going to go, and I still lost money because theta ate up the trade. That used to really tilt me. With futures, there's no theta, so it doesn't matter if the move happens in 5 seconds or in 2 hours. You still make the exact same amount of money, or lose the same amount of money, um, depending on if you were correct or wrong on your trade. I will say, so I mostly trade NQ, and if you want to watch it, if you use TradingView, the ticker symbol is going to be NQ1 exclamation mark, and if you watch NQ during the New York Stock Exchange hours, like, you can get a 50-point move in a matter of seconds. So like, there's a lot of liquidity there. Really easy to make money if you know how to time, or if your strategy works well, you're going to make money quicker than you would trading other indices. Moving along here, this is just going to be a cheap way to get into trading if you don't have capital to start up on your own. I will say right off the bat, do not do this if you're not at least a break-even trader on options, or a profitable trader on options. You're going to end up throwing your money away. There's going to be one caveat to that where it's okay to do this, but you need to do it sensibly. So I'm going to give my honest opinion of two different prop firms, Apex Trader Funding and Topstep. I've been using Apex for a while, and everything's been great. I've got multiple payouts from them with no issues. Everything is exactly what they advertise. So first bullet point, receive 100% of the first 25K per account and 90% beyond that. So basically they're saying the first $25,000 that you make is 100% yours to keep. Anything over $25,000, they're going to keep 10%. You get the 90%. You're allowed to do 2 payouts per month. The first one is between the 1st and the 5th of the month. The second one is between the 15th and the 20th of the month. And to qualify for a payout, you have to have 10 trading days before you can take a payout. There's also a minimum dollar amount that you're allowed to take as a payout. I don't remember exactly what it is. I always take out the maximum. So, and I'll get into that in a second. When you're on the eval account, it takes a minimum of 7 days to qualify. So if you do an evaluation with Apex Trader Funding, you have to trade for 7 days, and the amount that you have to make in the 7 days varies depending on the account size. But on the right image, you'll see profit goal 3,000 for the 50K. So for a 50K account, you have to make $3,000, and you have to trade for a minimum of 7 days. There's no maximum, so you could trade for 20 days and make your $3,000. You would get funded. But if you make $3,000 in 5 days, you're still going to have to trade for 2 more days and stay above that $3,000 threshold to get funded. And basically, they're just looking for consistency. They don't want people that qualify an account in 1 day just by taking a lucky trade. They want to see that you're consistent over time. Trade full-size contracts in evaluations or funded accounts. Just saying that you can trade the full mini, so ES, NQ, or whatever. On a 50K, you're allowed to trade 10, which is a ridiculous size. You should not trade that much. And you can also trade 100 micros. Just be careful with micros. If you're anywhere close to 10 micros, you should just switch to the mini because your fees are going to be through the roof. No daily drawdowns, basically saying there's no daily drawdown limit. Like, you could lose $1,000 in a day or $2,000 in a day, and you would still have your account. But you can't hit the trilling threshold, which is $2,500. Again, that's for a 50K. It varies for other account sizes. You're able to trade on holidays, and also news events. Just use your normal trading strategy during news events. Again, they're not looking for people that are YOLOing 10 contracts in news and just looking for a lucky run. No total cap on maximum payout. That's kind of true. One-step evaluation process, real-time data included. Simple risk management rules. You'll have to read through the rules yourself. There's quite a few, but read them all. Make sure you understand them. Trade with multiple accounts up to 20 max. So you can use a trade copier with 20 accounts if you wanted to, which is pretty crazy. You better make sure you're profitable if you're doing that. So I said no cap on the maximum payout being kind of true. The reason I said that, so like for example, on a 50K, you're able to withdraw a maximum of $2,000 twice a month, which would be a total of $4,000. And that's for the first 3 months. After you hit 4 months of trading on an account, you can withdraw everything that you've made. So if you ran the account up to 100,000, you could basically withdraw your 50,000 minus your $2,500 trailing threshold. So you'd be able to take out 47.5. But there is a maximum for the first 3 months. I just want to be very clear about that, so nobody's surprised by anything. Down in the bottom left, I have a little note to myself saying Rhythmic versus Tradeovate. And all that is you can see in this right image, it says $167 a month, and then there's a gold button that says Rhythmic. Rhythmic accounts are really going to be recommended for people that are trading, what's it called, on a PC. If you're trading on a Mac or a mobile or tablet, you probably will want to go with the Tradeovate account. And to find those, you just go to the Apex Trader Funding website, scroll down to the bottom, and you'll see the Tradeovate accounts. But if you're trading on a PC, I would recommend going with Rhythmic and going with, or using Quantower as your trading platform. But you can do whatever's best for you. NinjaTrader. There's a bunch of other trading platforms you can use. Whatever you like. I personally like Quantower with Rhythmic. So I believe I already said I've had multiple payouts with Apex and no issues there. Everything's been exactly what they've said. The only issue that I've had with them as a company was I went onto their Discord and asked a question. And a moderator replied to me with like a really bad attitude. And I kind of like answered back, like, what's up with the attitude? Like, I'm just asking a question. To which they replied to me again with more attitude. I made a snide remark back to them. I think their second reply was something to the effect of like, I don't have to do this or whatever. And I'm like, so if you don't like what you're doing, step down, let somebody else do it. And to that point, then they threatened to ban me. And I'm like, I really don't know what the issue is. I've been very polite. I'm just asking a question. I've been very professional. There's always two sides to every story, so, it's, very possible that person was having a bad day or whatever. But to my defense, I had like 6 people DM me like, why was that mod being so rude to you? And I'm like, I really don't know. Like, I just asked a question. So I feel like how I feel is valid just based on the amount of people that DM me like, whoa, what was that all about? And after that, that incident, I got an email asking for feedback on, a review of what I thought of Apex Trader Funding. And I wrote an honest reply like, hey, like this happened. I was just asking a simple question. I got attitude. I don't understand it. Very unprofessional. Made me want to go and find a different, prop firm to trade with. And that's the truth. It really did. Which will bring up the next prop firm I'm going over. And anyway, ever since I sent that feedback, I haven't seen the moderators acting like that in Apex's Discord. So maybe they had a meeting and everybody got together and they told them not to act like that anymore. I hope that is what happened because, like I said, everything else so far about the company has been great. The payouts have been great. Everything has been exactly what they advertise. Um, and then when you see the 167 a month, in the top right corner, there will be a link that will give you 80% off. Apex offers 70% off, sometimes 80% off, and sometimes 90% off. If you click the link and it doesn't offer 80% off at that given time or 90% off, I would wait until they have a deal because they run the deals all the time. You can just check back on the website, or you can sign up like on their Facebook page and they'll announce when they're doing specials or whatever. Excuse me. And yeah, so anyway, take advantage of that. If they're doing 90% off, you can get a 50K account for like $16, which is just nothing. All right, on to the next. So this next slide, after I had that incident with Apex, I moved over to Topstep just because that left a really bad taste in my mouth. And so they offer free charts, I guess, from TradingView. They have a tilt indicator. I don't know what that is. And again, I'm just being honest about everything. I always am honest about everything, but I've just barely started using Topstep. I've never had a payout from them. I know people that have had payouts from them, so I know that that's not an issue. But I can only speak from what I've experienced so far. I haven't looked through a lot of their stuff, like the tilt indicator or whatever. It's not something that I would really use because I already have, a good trading system with good risk management and discipline where I don't, if I feel myself getting upset or whatever, I just shut down and walk away. They have a built-in trade copier, so I was talking about that with Apex. You can have up to 20 accounts with Apex, and you can copy trade between those accounts. I don't know anything about Topstep's trade copier. It's not something that I use. I just trade one account at a time. But you can have multiple accounts with them. I don't know what the limit is. And they have a free built-in trade copier, apparently. They live stream on Topstep TV, which is basically their YouTube channel, where they have their pro traders that trade. Again, it's not anything that I've checked out because I trade on my own. I don't watch other people. But I know that they have pros there that are trading. They explain their entries and their exits and their thought process behind the trade. So it might be something good to check out if you don't have a good system yet. Commission-free trading, dedicated data feed. Topstep has a way better data feed than Apex, where Apex sometimes like their data feed will crash and Topstep will be fine. So just something to be aware of. So other than that small issue in Discord, and I should say up in the top right, there will be a link right now for Topstep. And as you can see, like their monthly price is on sale right now, $49 a month. So it's not a bad price. I believe through January 5th, so this is just going to be like 24 hours after I post this video, you can use code New Year's 2024, and that price would end up being $29 a month. But that's only going to be good for, like I said, like 24 hours after I post this video. So if you want to take advantage of that, you better rush over there. And then you can see the rest. Profit target is the same, 3,000. I think you only have to trade for 2 days with Topstep and make $3,000. Maximum position size is 5 contracts, and the maximum loss limit is 2,000. I feel like there's something else I wanted to say. Oh, the next thing I wanted to show you about Topstep, I thought this was really cool. They have... Sorry, I didn't want to include this in the PowerPoint because it's just like too much to copy over, but they offer free coaching. If you click on this free coaching tab in Topstep, they talk about their approach and you can review their approach there. Again, we talked about the Topstep TV. This is their YouTube channel. And they trade live together during the day. Monday through Friday, 8 to 1 Central. Uh, excuse me. They offer group coaching Monday through Thursday from 12 to 1 Central. You can join there. And they have a Discord community. Topstep really seems like they care about their customers. Again, so far, everything I've dealt with them has been great. I've had to reach out to their support staff one time. They were very professional, very friendly, very courteous. I had no issues. So that's it. Hopefully this is a helpful video for people. Like I said, the links will be in the video description. The links will also be popping up in the top right of your screen for Apex and for Topstep if you're interested in either one of those. I'm gonna reiterate this again. If you are not a consistently profitable options trader, don't think that you're suddenly going to become a profitable trader and start throwing money at Apex or Topstep. At least be a break-even option trader, because not having the theta decay is probably the difference between being break-even and profitable. And if you're a profitable options trader, then you'll crush in futures. Trying to think if there's anything else that I need to say. I guess like and subscribe, please. I appreciate all of you. Thank you for your time. If you watch this whole thing, you guys are the best. I appreciate you. Much love, and we'll see you in the next one. Bye.